Our market monitor tonight likes technology and financials heading into the new year. He says one of the overall themes for 2015 will be the return of growth stocks. He's Stephen Dudash, President and Financial Advisor at IHT Wealth Management. Steve, good to see you. Welcome tonight.
Thank you, and Happy New Year.
The two best performing sectors in 2014 were defensive issues, yes. Utilities and healthcare. But you see a return of growth in 2015. Why?
Yeah, I mean, we're definitely bullish on both, the tech sector as well as the financial sector. But the return of interest in the growth stocks has been really fascinating in the last few months. The last few years, investors have been desperate for anything paying any kind of dividend whatsoever, with yields essentially being at zero. But if interest rates do continue to increase, which a lot of people feel will happen this year, that desperation will likely start to go away, and we feel there'll be renewed interest in companies that are taking that extra earnings, putting it back into the firm, trying to hit the bottom line, and trying to get outpaced returns.
Stephen, you have among the financials that you're recommending is Wells Fargo. Tell us why you like it. It's now trading at $55 a share.
Yeah, again, we like financials as a whole. The Bank of America problem that's been going on has been well documented. The cultural issues with Merrill Lynch, the fact that the commoditization of that industry and the retention bonuses that are falling off. We feel that Wells Fargo, out of the major financial wirehouses, is in the best position to pick up market share in the next few, say 12 to 18 months when that exodus takes place. They're the only major player out there that has both your traditional brokerage side as well as an independent channel that gives them a little unique advantage over their peers. We think they're going to outpace their predictions and be in a sector that's going to outpace the market as well.
You also have J.P. Morgan Chase on this list. Tough year, a lot of legal issues facing them. Jamie Dimon's health. What do you see happening in 2015?
Tough couple years with them, but again, in the financial sector though as a whole, as the economy continues to pick up, if interest rates do rise, which likely second, third quarter of this year, it's finally going to start taking place, you're going to see a new flow of refinances and purchases as borrowers are coming to the realization that the extremely low interest rate market that we've been in for the last 6-7 years is starting to come to an end. That on top of the fact that we're in the toughest regulatory market that we've ever seen. In the new political climate, it's likely that that's going to ease up a little bit. We feel the stock is at a discount right now and would likely, if you pick it up, can pick up a few extra points as well as being outperforming the overall market.
You have one tech stock that you're recommending tonight. It's called CDW. It trades on the NASDAQ, this IT firm. Tell us about it. Why do you like it?
Yeah, it's a smaller, it just came out in the market maybe about 12, 14 months ago, smaller software, hardware provider. In '08, businesses, when the recession hit, stopped spending on tech. And the recession took not a very long time, but the recovery just seemed like it never took place. Just in the last 12 months, have you started to see businesses spending the cashes that they've been hoarding, putting it back into technology as well as other sectors? We think that that sector as a whole is going to continue going into 2015, and CDW is in an excellent position to outpace their peers in a sector that should outpace the overall market.
Stephen Dudash with IHT Wealth Management. Thanks and Happy New Year.
Yeah, you too. Have a nice day.